Hi there, welcome to Market Call. Kim Bolton is on the show today. Kim is President and Portfolio Manager at Black Swan Dexteritas, and he will take your calls, emails, tweets and video questions on technology stocks. Call him toll free, 1-855-326-6266. Send him an email. The address has changed slightly. It's now marketcall@bnnbloomberg.ca. Or you can put your question on Twitter @MarketCall. Kim, great to see you.
Great to see you, Andrew.
And we've seen you on Weekly with Andrew McCreath, but this is your Market Call debut.
This is my first.
Very exciting having you. And just remind us, Black Swan Dexteritas, and the name sounds a little ominous.
You did well there.
What do you do?
We're a portfolio manager, and we run a hedge fund in the global technology arena on the publicly traded side. We originally started out with some investors that came from the private entrepreneurial side of technology. And so they had that covered, they had their private equity, and they wanted to participate in the publicly traded segment of the technology arena. And so that's where we came in.
Why Black Swan?
Well, we started out 4.5 years ago, and this is sort of a long story. However, we were in Israel with our original investors, so there was myself and my son's roommate, who became a very famous technology entrepreneur, Lev Levayev, and they suggested that we have a name called BSD, which in Israel means by the grace of God, and I came up with the idea of BSD being Black Swan Dexteritas, which means prosperously investing in the technology arena with great skill and agility.
Okay. Now, you have some graphics for us, and you're looking at what you call the digital business, because things are really coming together. Self-driving cars, cloud computing. Tell us how you're thinking about technology these days.
Oh, okay. We have it up.
There we are. It's a little hard to read, but you've got all the companies here that are the significant players in this really transformation, digital transformation.
Yeah. The reason I like this chart, or this diagram, is it really shows everyone the massive expanse of publicly traded technology companies around the world. We actually draw data on 718 technology vendors and end users. So this is just sort of a smattering. But what I really wanted to point out here is not the names particularly around it, because there are a lot more names than that. But if you look at the bullseye there, it says digital business. This is what it's all about. It's digitalizing business around the world. And then the next sort of second ring there has three themes. It's about the virtual world to the real world, and then
intelligence everywhere,
which is all about data. It's the evolution of data. And then finally, the electrification, digitalization. Those are the three themes that we see revolving around the real core of digitalizing business around the world. And then the outer ring are the 10 trends. And I can sort of touch on that if you like.
We're going to hear about more of this from you later, and we are getting tight for time here. But one that's jumping, well, 5G, that's the new standard that's coming out for mobile phones.
Yeah. So 5G, if you listen to Gartner Research, which is really the largest research company in the world catering to the technology sector, they say that the 5G market is going to grow to a market cap of $1.23 trillion by 2026. And what this is all happening, right now, if you look at the devices around the world, there are about 6.5 billion devices around the world. And by
wireless devices.
Wireless, wireless and also mobile.
Okay.
That is actually going to grow to 20.8 billion. So it's going from 6.5 billion to 20.8 billion by 2020 in 2 more years. So they needed a system to actually be able to have that all work. And so they came out with small cells, which is really the core of what 5G is all about. And so there are distributors and platforms around it. What we particularly like participating in this sector, or this evolution of 5G, is more about the arms dealers. You know, you don't sort of bet on who's going to win the war. but you just go for the arms dealers, which are the hardware and the software suppliers.
We're looking forward to it. Kim Bolton making his market call debut today. Kim is president and portfolio manager at Black Swan Dexteritas. The topic today, technology stocks. Give us a call, 1-855-326-6266. If you're listening to us on the iHeartRadio Canada app or AM 1410 in Vancouver, 1-855-326-6266. An email from AJ in Vancouver wants to know about Shopify. What's your opinion, please?
Thanks very much. Shopify, we owned it. If you go back about a year ago, it was trading, in the sort of mid 80s, stretched all the way up to about 150, and then you had the Citron Research, the short, come out, and it actually drove it back down to 90. So what we did is we actually owned it from about $90 up to about 135. We saw the valuation getting too rich, and we sold it. We didn't buy it on the way back down because of the Citron Research report that was out there. However, we do like the stock. It's right now trading at about, I think, around $150. But we'd look to buy it back down at about $110.
So a little expensive for you right now.
Yeah, a little expensive right now. However, they did have the recent conference. It was May 7th to 9th here. It was the Unite conference.
For developers and things like that? Okay.
And they came out with a lot of new marketing solutions. One was the Ping, which was for the mobile side. The other one was the Kit, which was more for the advertising via Facebook and Instagram. Mm-hmm. It just sort of extends their runway, which is probably why it's keeping the price a little bit high. It's a bit rich for us right now.
Alex is calling from Montreal. Go ahead, Alex.
Ask you about IBM. Do you see any future in that stock? Because one of their major shareholders, Warren Buffett, dumped his to buy Apple. Thank you.
Okay. So if you don't track IBM, talk to us about the older line tech companies.
Yeah. I'll talk about IBM. We're a long short hedge fund.
Okay.
So this is a great example of a stock that trades in a range. You sort of buy it in the 140s, you sell it in the 160s if it ever sort of gets there. Wonderful new businesses. You look at their artificial intelligence when it comes to Watson, they're a leader on that. But the problem is with IBM is they have a lot of legacy hardware side, and it's sort of like a ball and chain that they carry around with it. So we sort of just trade that stock within that range.
Okay, and we've got Anne calling from Markham, Ontario. Go ahead, Anne.
Tim and Andy, thank you for taking my call.
Pleasure.
I was wondering what your thoughts are on Salesforce.com for a long-term hold. Thank you very much.
Long-time hold, okay.
Thank you very much for your call. Salesforce, it just reported this week, had once again blowout numbers. Salesforce is in the sector of application software. Just as I step back, application software actually accounts for about 26% of our fund.
And what is application software again?
So application software, it's the likes of Facebook and Salesforce and some of the digital twin stories that we talk about. And it's software, and the reason it's really got a new boost is for two reasons. One, because of the cloud. And so a lot of the application software companies like Salesforce, like Facebook, do joint ventures with a lot of the cloud distributors of AWS and Azure and Google, and that's given them greater access. The second thing is that you've moved from a licensing to a subscription, and Salesforce is a great example, and they're very much a leader when it comes to subscription. Subscription means that it's almost like going to a restaurant and getting a la carte rather than being told what you're going to eat. Now, for Salesforce, growth rate of right around 25%, and it's been consistent for the last number of years, 25 to sort of 30%. Not only that, but their guidance going into 2019 is 25% growth on the top and bottom line. So it's currently trading around $129. We got a 3.8% position in that. Like a lot of the analysts out there, we sort of have our target price, 12-month target price between 150 and 160. We're right at 155. So it's now, it's not a cheap stock at all. It's trading at about 7.2 times forward revenue valuation. So, but as long as it continues that trend of 25% growth, it still has a long runway.
Okay, we have an email from Bill. Wants to know about Amazon, the tech titan.
Amazon, Bill, you must be looking at our portfolio. Amazon is actually our largest position. We did actually pull it back a little bit going into the earnings season, but we still own just over 6%. Current price trading right around that sort of 16.40. It's not a cheap stock. It's got a PEG of 8.84. Our target price is 18.75, so 16.40 up to 18.75 over the next 12 months. This is sort of the poster child within the consumer services area. They had blowout numbers in the Q1 in this recent earnings season, really very much due to the Amazon Web Services, which is the cloud side. They actually own, you know, depending on who you talk to, and we very much listen to the folks over at Gartner, and they figure that in the cloud space, which is probably only in about maybe the third or fourth inning if this is a baseball game, so it's got a long runway, they actually own around 70 to 75% of that market. So
in the cloud, sorry, Amazon
Web Services.
It's 75%.
Yeah, well, Amazon has got about 70, 75%. Then you got Microsoft Azure.
Yeah.
Which probably counts for another 15%. And then you got Google, and then just some small people.
Right.
So it's, you know, Amazon, it's just a tremendous cash cow that they have there. And that is exactly why it deserves not only the runway, but the high multiples.
Okay, so you would be a buyer of Amazon, or at least a holder, right?
Well, it's our largest position.
Yeah, I'm sorry,
6%.
you mentioned that. Yes, of course.
So, well, we're not buying anymore.
Sure.
We actually, as I mentioned, going into the earnings season, we added up around just over 7%, and we took a little bit of profit coming off of that. Sometimes when we go into the earnings season with a large position like this, that is sort of stretching to new high prices, historical prices for the stock, sometimes we'll write some calls. However, we just see a long runway for Amazon.
Okay, we're going to be right back with Kim Bolton making his market call debut. He is president and portfolio manager at Black Swan Dexteritas. Tech stocks are on the menu. The number is 1-855-326-6266.
Maybe on the next.
We have an email from John in Kamloops, BC. Wants to know about Cisco Systems. Your thoughts, please.
Hello, John from Kamloops, BC. Cisco. We recently bought Cisco just before the earnings season. It was back early in the first quarter of this year. It was down, you know, it sort of rolled off in that first week of February when the market was coming off, and we bought it around 37.5. Currently trading, I think, around 43, and we've added to it again, so we have a 3.3% position. We don't often have hardware. However, at the beginning of this program, we were talking about 5G deployment, and this is, you know, we don't buy sort of the platforms or the telecoms, which would be like an Ericsson or a Huawei or a Nokia. However, we do like Cisco on the 5G deployment because they're the folks that are actually supplying the arms.
Okay.
In other words, the switching equipment and the routers. And it's a longer-term hold.
Longer-term hold.
Yeah.
You're not wild about the valuation right now, it sounds like.
Even, the PEG right now, price earnings to growth is running about 1.7. So, if it were to come down below 37.5, we'd definitely buy some more.
John in Montreal, go ahead, please.
A question on NDVA, Endiva. I'd like your opinion whether you like it or not, and Andy may have consensus. Thank you.
No problem. NVIDIA, no problem. Huge graphics chips play perhaps on autonomous cars.
Yeah, this is NVIDIA is the poster child for the GPUs, the graphic processing units. It has a wonderful moat around it, mainly because it has a lead. It's interesting, a lot of these GPU semi-chip makers, they really sort of came out of the gaming side, but then they got a lot of traction when, the autonomous driving side came along. And then with the Internet of Things that are coming along, so it's just extending the runway. Current price sitting around $255. The PEG, it makes it a bit expensive, up at 4.18. We took profit, actually. So we owned it down in sort of the 140 level, rode it all the way up to 220, sitting, as I said, around 255. We'd look to reestablish down around that 220. But it has a tremendous business. Just the GPU business grew 131%. 131%.
That's the graphics processing.
In 2017. The GPU segment has the highest revenue segment and contributed 38.5% growth to NVIDIA.
Let's see what the analysts have to say. It looks like they're kind of mixed. There are 26 buys, but there are 11 holds and 2 sells. Average target about 278, and the stock is around $257 today. Warren in Toronto, go ahead, please.
Your opinion on Micron technology at current price, short-term and long-term, please?
You got it.
Thank you.
Thanks a lot.
Micron. We own it. We bought it a long, long time ago. We bought it back in, our first buys were down at $17 back in the fall of 2016 because if I could just sort of back up, we have an investment advisory committee that we meet every month. And that investment advisory committee is made up of our shareholders and investors, and mainly technology entrepreneurs. They ask us to actually do studies for them and do some research. And I have a number of research people here in Toronto, over in Herzliya in Israel, and down in the Valley. One of the subjects they asked us back in the summer of 2016 was to actually get into investigate assisted driving, which of course led into the autonomous driving. And one of the companies that we came across was Micron. Micron, big memory storage company out there, both in the NAND and the DRAM. So it's gone all the way from a year and a half ago, from $20 up here, it got all the way up to just over $60 recently, has pulled back. It's a volatile stock, but the valuation is pretty compelling. The price earnings growth ratio is running at a 0.22. So we actually own a 3% position. It's not a large position. Our target here is $80, 1 year hence. But we also like, sort of in that space, a company, Infineon. So Warren.
Infineon. What's the ticker on that?
IFNNY.
IF. So it's pink sheets or over the counter? Okay. Yeah. Oh, yeah, we're going to be talking more about that later. I forgot about that. Okay. Yeah. So, okay.
Yeah.
Do you want to finish your thought there, or have you said enough?
No. Micron is a leader in both the NAND and the DRAM. A leader being in the NAND memory chips. They own about 44% market share. In the DRAM, they own about 22%. So we always go after the leaders, and then we have certain entry points and exit points. So yeah.
We are going to take a break. We're going to get a bit science fiction with Kim Bolton after the break. We're going to talk about emerging technology that lets you take a physical object and then create a digital twin. Why would you want to do that, and how can you make money off it? Kim Bolton is on Market Call. He's portfolio manager at Black Swan Dexteritas. Technology stocks are on the menu. Give him a call, 1-855-326-6266. This is Kim's debut Market Call appearance. So instead of past picks, we'll talk about something he has been watching, digital twins. So what's a digital twin?
You know, I talked about our investment advisory committee, and they actually asked us to drill down into the, you know, the Internet of Things and where that runway is going. Which actually led to this topic of digital twins. Now, digital twins is basically taking a physical object and digitalizing. Remember that bullseye, digitalizing business. So you digitalize a physical object, and then you put it onto the screen. And then you have a virtual representation of that object on the screen. And then you can gather data over its life cycle, and you can hypothetically change things in that object without actually changing the object, and you can hypothetically see if it's running more efficient or more effective. I always look at it as an avatar. So you're just taking an avatar of an object. It's interesting though, Andrew, you know, it can be an object like a machine, or it could be a factory floor. Or it could be a city.
So you can run simulations.
On a whole city.
Let's ban cars from the entire city. How about that?
So, you know, on an environment like that of a city, a great example is Singapore. Singapore brought a company in, and I'll talk about it, called Dassault.
Okay, the big French outfit.
Yes. And they brought them in, and they basically built an avatar of their city. How'd they do it? Because they put in sensors and cameras all over the city. If you go to Singapore, you don't see that many police around. Why? Because everyone's being watched, and they're gathering data on everything and on situations. So they can actually change, if they see traffic, a lot of traffic going one way, they can make more lanes and take lanes away from the other way. They have sensors in sewers. And so they can actually see and monitor and for maintenance purposes for sewers. And so they have a central mission control. And you can see how it can become more efficient and more effective.
And you're going to be talking about Dassault later in the show. But in general, are there other ideas for investing in this space?
Absolutely. When we get into a trend like this, we really start to drill down. We want to understand the trend, the technology behind it, but then we want to find out the investment ecosystem around it. And so the investment ecosystem around digital twins is really threefold. One is hardware, two is software, and three are end users. On the hardware side, it's really sort of divided into two. It's the sensing and power side. So the first one that comes to mind is Texas Instruments. Texas Instruments is the world's largest power management chip manufacturer out there. And then you have Infineon. Infineon has, and we'll talk about it a little later, but they are very big into the non-optical sensor side. So that's on the sensing and power for hardware. And then you have the processing. Processing, you know, the poster childs are the Qualcomm, NVIDIA, which we just talked about, and Intel. Then on the software side, it's again sort of divided into two. One is on the data management, companies like Tableau, or even into Adobe.
Tableau or Adobe.
Yeah.
Okay.
And then there's the CAD side, which we just talked about, the computer-assisted design, which is like a Dassault or an Autodesk or a PTC. And then finally, there's the end users. And there are some end users that actually made a business out of this. So, for example, Siemens, German company, they actually have a digital twins business unit that they go around and teach companies around the world how to actually embrace digital twins to make their factory floors more efficient and more effective.
We're going to be back with Kim Bolton of Black Swan Dexteritas. He's answering your questions on technology stocks. Give us a call, 1-855-326-6266. Kyle is calling from Mississauga, Ontario. Kyle, go ahead.
Good afternoon, gentlemen.
Hi there.
Just got a question for you guys regarding Square. I recently held a position earlier in the year and sold it around the $50 range. I kind of got worried the valuations were getting a bit too steep as Square is still not turning a profit. But their uptrend has continued. I'm just wondering if the time is now right to re-enter a position in Square.
No problem. Thanks very much indeed.
Hi, Kyle. We don't own Square. We follow it. However, in that fintech space, we own 3 stocks: Visa, MasterCard, and more recently, PayPal.
Okay.
It's interesting, you know, we took some profit on our Visa and MasterCard going into the Q1 earnings season. We looked at Square, and our preferred pick was actually PayPal. You know, we picked it up around $77 currently right now, sitting up around 83. You know, it's we built it up to about a 3.6% position. We very much liked it versus Square because the price earnings growth ratio on Square was a lot steeper than that of PayPal, and the PayPal peg is around 1.8.
Oh, okay, so you just think PayPal looks like better value at this stage anyway.
Yeah.
Deborah in Okanagan Falls, BC. Fire ahead, please.
Hello, thank you for taking my question.
Pleasure.
My call today is on Microsoft. I've heard you mention the cloud, and maybe with your technical expertise, maybe you can just answer a little teaching question about why this is so important and maybe what it is. And I've been following Microsoft. I'm specifically looking for an entry point. It's on an uptrend and an exit point. And do you like stock?
Yeah, thank you very much. Deborah? So 2 questions, a little bit about the cloud, and then we'll talk about Microsoft stock. So, you know, the cloud has actually been around for a long, long time. But it really got traction, especially when Amazon started to invest heavily into it. And they got a lead, and that's why they own almost 3/4% of that cloud market. And they just heavily invested into the facilities for that. But it made a lot of sense. So basically the evolution of the cloud was that normally enterprises, businesses, would have, if you go back 5 to 10 years ago, they'd have their servers in their own server room. And then they'd have an IT group, and that IT group had to maintain them, had to update them. And it was expensive. They had to buy their own servers, they had to update it, they had to pay for the IT people. And then the cloud came along, and Amazon Web Services jumped onto it, and they said, how about if we did that for you? And it made so much sense, because you didn't have to have a massive army of IT people. Amazon would have it. They would do their own updating. And it wasn't as expensive. You didn't have to have your own space, and you didn't have to cool it, because a lot of the data rooms need, it costs a lot to actually cool them. So it was an economies of scale that came along, and it was much more efficient, much more effective. And it's certainly in this day and age where technology is changing very rapidly, particularly on the software side. It made a lot of sense. Amazon actually jumped on it got a lead, built a moat. Every time there was a new entrant that would come in, is that they cut their prices. And they still had fantastic margins. But then Amazon, really with the change in the leadership, at Microsoft, when Nadella came in, and he started to pivot over into both the software and into the cloud, and they built up this Microsoft Azure, which is really sort of the second choice out there, and is actually growing faster than that of Amazon Web Services. Now, Microsoft, it's trading right around $100 right here. We actually have a 12-month target of 110. So maybe, so I would suggest we own it. We have about a 3 1/3% position in here. We've owned it for quite a while. We thought about writing some calls against it going into the earnings seasons. We didn't. We did on some other ones. But Deborah, I would actually wait. I would wait for it to come back down into the low 90s.
Okay. We've got Ron on the line from Calgary. Ron, you're on the air.
Hey, thank you for taking my call.
Pleasure.
I was wondering if you could give me some insight on Universal Display.
Universal Display. And remind us what they do, Kim.
Universal Display, this is one of our big trends. You remember in that circle diagram. So OLED, OLED is the symbol. You have to have a strong stomach for it. If you go back about a year ago, it was trading at about $85, went all the way up to 175, came back down to about 90, and here we are back to about 100. What Universal Display does is that they have the patents and they get the royalties when for the organic light emitting diodes. What that is, it's the new screen. So it's the new screens that actually Apple just announced this week. The next generation, the new phones that they're going to be coming out next year are going to have OLED. All of the Samsung phones are going to have these OLED screens. And basically what it is, not to get too technical, is that in the old LED, OLED, in the old LCD display screens, you had a number of layers on the back. And then this organic light emitting diode technology actually made it a lot thinner. And it allows you to actually have much thinner screens in there, which allows the chip makers to actually build more powerful memories, more powerful processing units. And so that's why a lot of the state-of-the-art smartphones out there are actually going to the OLED. They are a little more expensive than the legacy LCD, but that's where they're going. And a great example is Apple stating that this week.
And so just remind us Universal Display's position in all this.
Okay, so we own we have a 2.5% position in the portfolio. You know, the price earnings growth is running at about 1.7%. Current price is right around that 100 level. Earlier this week, got all the way up to 120. If you look at some of the analysts out there, Goldman has a 12-month price target of $200. We say a 12-month price target of $180. This is, but I would recommend that you don't go all in, that you pick your spots.
Okay, we've got to take a break. Kim Bolton is our guest on Market Call. He's answering your questions on technology stocks, 1-855-326-6266. And if you're listening to us on the iHeart Canada app or AM 1410 in Vancouver, call in, same number, 1-855-326-6266. We are back, and Kim Bolton is answering your questions on technology stocks. Kareem in Montreal, go ahead, please.
Hi, good afternoon, gentlemen. Thank you
Hi
very
there.
much for taking my call.
Pleasure.
I'm calling about Arista Networks stock hasn't been doing great of late. I'm just wondering if they're losing market share to Cisco. I've owned it for the past little while and I'm breaking even. I'm just wondering if you continue to hold the stock. Thank you very much.
No problem. So Arista Networks.
Hi, Karim. We don't own it now. We have owned it in the past. And likewise, it's sort of plateaued. You know, we actually have a price target in here of 12 months out of 230, and here we are at 260. You know, we owned it back a couple of years ago when they started. You know, it was some old guard from Cisco that actually came back, started up their own firm. They had a better product. And they actually made it through a lot of litigation with Cisco. So I think there are better choices out there. For example, in Cisco, you know, we own Cisco and we don't own Arista.
Okay. We have Andrea calling from Ottawa. Go ahead.
Good afternoon, gentlemen.
Hi there.
Thank you for taking my call. And Andrew, thanks for the technology focus today.
Oh, good. Okay. Yeah, we probably should do more of these. There's so many interesting stories out there.
I was excited when I heard about this.
Okay, thanks.
So, Kim, what I'd like is to hear your opinion on Intel, please. I was looking at the future.
Okay, so Intel, I think you have said it's a good play potentially on this digital reproduction of situations people want to manipulate.
Yeah. Intel is a big player within that space of the digital twins that I was just talking about, and it's very much on the processing side. So Intel currently trading, you know, around that 57. We have just shy of a 3% position on Intel, and you know, they are the poster child when it comes to the central processing unit. They came out with the new release of their Xeon SP family of processors. They're a big driver with the likes of their customers of Alibaba and Amazon and Baidu, and they have all the big guys out there that buy into it. They also have been aggressive into the 3D NAND technology side. So this is very much, Intel to us, is very much a core holding, rather than looking towards some of the trends out there.
It's a core holding. You really don't want to be without Intel.
That's right.
Okay, that's interesting. We'll be back with Kim Bolton of Black Swan Dexteritas. Kim is answering your questions on tech stocks, 1-855-326-6266. Dave is standing by in Toronto. Fire ahead, Dave.
Hi, thank you for taking my call.
Pleasure.
So my question is about Facebook for a long-term hold, 5 to 10 years. What do you think? Like, will the company continue growing? My position is like there's so many eyeballs on Instagram and WhatsApp and Facebook, and if they ever monetize WhatsApp, like, look out, right? So can I get the 5 to 10 year outlook and street consensus, please? Thank you very much.
No problem. Thanks very much indeed.
Hi, Dave. Facebook. Facebook is it's another one of the application software companies. We currently have a 5% position, so it's right up in certainly the top 10 of our holdings. Currently trading now about $192. We have a 12-month target here of sort of 235. You know, Andrew, Dave, I did a segment with Andrew McCreath about a month ago, just as we were going into that GDPR.
Which is the restriction on them communicating with you by email.
Correct.
And privacy, the European rule, yeah.
We saw, you know, and it was happening right around their earnings. It went from the low 170s all the way down to the upper 160s. We actually sold it just going into their earnings, and going into the whole testimony and so on. We picked it up in the low 160s. and we're going to hold that 5% position over the course of the year. Everyone can talk about the fantastic user growth and the engagement, but it's really to us, it's the trajectory of the free cash flow and the generation and the balance sheet cash, net cash in its life cycle. And really what they can do with those 2 billion people that are captive clients of theirs. You know, the possibilities of extending this social network into e-commerce or into payment processing or even into streaming movies. You know, they can compete against the big ones out there of the PayPals and the Amazons and the Squares, as we were talking, or even with Netflix in the streaming side, because they have such a captive audience, very sticky audience. So we love this company. Any kind of pullback that you can have. The last thing I'll say on the GDPR, everyone thought that it was going to be a hurdle for them. It's actually worked out very nicely for them because they've been able to spend the money and actually protect the privacy. And a lot of the other software application companies out there have had to pull their apps over in Europe.
Because Facebook,
because they didn't meet the requirements of the GDPR, but Facebook could
spend in advance of these new privacy rules.
Exactly.
After the break, top picks from Kim Bolton. We'll be right back. Top pick number 1, Dassault Systèmes. I always think the name Dassault, it reminds me of fighter jets and things made by the French, but it's a big player in other kinds of tech.
Yep. Thanks, Andrew. D-A-S-T, DASTI. We picked this up last mid-fall, October, November, and it's up 35–40%, but it's still, you know, it's still got a decent peg of 1.7%. Current price sitting at around $140. We got a target of $160. So basically what they do, they're involved in that digital twins ecosystem. And they are a they're the new generation of computer-aided design, CAD. The old Autodesk, now Dassault and basically they make virtual models and designs and simulate, you know, factory machines and factory floors and even cities like Singapore.
Okay, and Infineon, now just remind us, you did talk about them earlier, major player in the digital transformation of industry, for one thing.
Correct, and a significant and a very key player and a pure player, actually, in the autonomous driving side. What they're king of is in the magnetic field sensors and position sensing. And so in the autonomous electrification, the whole, all that's going on in autonomous driving ecosystem, they are number 2 in the sensors, next to Robert Bosch. Bosch actually has a lot of other businesses, but this is a beautiful pure play into the sensing side for autonomous vehicles. Current price sitting at around 27.5%. We got a 5.1% position. We got a target, a 12-month target, up at around $34.
And you mentioned, I think, Robert Bosch, the German electronic company.
Yeah, that's it. You know, they are a leader when it comes to automotive sensors, but they also have a lot of other business units. And so if you want a pure play into automotive sensing, this Infineon is the place to go.
No problem. And Bosch is not public either, I don't believe. Tencent Holdings of China is your final top pick.
Tencent, this is a it's not a huge position. It's a 3% position. We took some profit going into the earnings season. Current price, $51, $52.50. We got a 12-month target here of 65. It's actually a relatively cheap stock because it's got a price-earnings growth ratio of 0.63, so it's actually relatively cheap. What does it do? It's primarily, it's the biggest market cap company in China now, and it's really involved in 3 businesses: social networks, like sort of the Facebook. Online games is one of its biggest businesses. Advertising, but it's also involved in cloud services. It's not cheap, but it's not expensive. It's got a 40 times full year EPS, but with the growth that is going on, and we're just talking during the break, maybe someday I'll come back and do a segment on gaming, because these folks just have a phenomenal business within gaming. And gaming is a very, very different story over in China. And gaming actually accounts for over half of the revenues of gaming around the world actually come from China. It's just massive.
Kim, lots of themes that we touched on, and the gaming, the focus on gaming will be amazing. All right. Yeah. Thank you very much. Great debut on Market Call. Kim Bolton has been our guest. Thank you very much indeed for watching our show. Have a wonderful weekend, and we will be back on Monday.